Hey guys, what's up? PipSnipers here, back for another update. Let's take a look at the US stock market today. The US stock market is a very important asset class to watch because it'll give us a little bit more of a better hint at where the crypto market is going to go and where the US economy is headed. Now, going all the way back to November of 2021, that's when we topped out. I actually think that this is a wave 3, a macro wave 3. Then we come down in a bullish descending broadening wedge, a triangle pattern for your wave 4, okay? And if you pulled out the 3-day RSI on the S&P 500, you could see that in this last leg, we were forming bullish divergence, which marked the bottom. The same bullish divergence, which marked the bottom on Bitcoin. So you can see how correlated the US stock market is to that of crypto. Going all the way back to 2022, we have a leading diagonal to the upside for your wave 1. So it's a leading diagonal because the waves are overlapping here. You then have an ABC correction in the form of a flat pattern where your C wave fails to terminate beyond the bottom of your A wave. And this is your wave 2. Okay, so let's just remove these drawings just so I can show you a little bit more clear. This over here was your wave 2. That's what I'm thinking. And this whole move all the way up to December of 2024 was our wave 3, right? You have your 5-wave move to the upside for your wave 1 of 3, ABC down for your wave 2 of 3. You pop back up above the 200-day moving average for your wave 3 of 3. Right over here, come down for your wave 4 of 3, and then for your wave 5 of 3, we print what's called an ending diagonal. So notice how the waves are overlapping here. I'll make it in red so you guys can see this a little bit more clear. Okay, this over here was your ending diagonal. See how the waves are overlapping each other? And then in November, December of 2024, that's when we have our macro wave 4 correction. Okay, let me remove these drawings. And yeah, so this was our macro wave 4 correction. And you know what actually tipped me off that this move could be corrective? It's because of how this A wave and B wave played out, right? We had a 3-wave move down in your A, a 3-wave move up in your B, and then a 5-wave move to the downside with an extension of the 5th. You see how many times we gap down here at open, right? Very, very scary for the average investor to be witnessing this in real time, or to have witnessed this in real time, right? So that was your extension of your wave 5 of C. And now what we see over here is the wave 4, this macro wave 4, came down to the 50% fib perfectly. So if we take a fib all the way from the bottom of wave 2 to the top of our expected wave 3, you can see that we just bounced off at the 50%. This is the 50% fib right here. See how we bounced off of it? And on the weekly time frame, we formed what's called a bullish line reversal candlestick pattern, where the weekly candle pierces. So this is actually your death candle right here. You see this candle on the weekly? Then we pierce the lows and then add over $10 trillion into the market, okay, with this candle. So you see how this weekly candle pierces the lows of the previous week and then closes up about over 50% of the last week's range, or the last week's candle, right? So it closes up over 50%. Then you form a doji the next week, a bullish engulfing the week after, and then you have another green weekly, and then a doji, and then a gap up above the 200-day. You see this gap up above the 200? That is very bullish, as it is, right? And going above the 200-day moving average is telling as it is that the correction is done, right? But in order for us to get extra confirmation that we're not going to see any, crazy moves to the downside, which I don't think we will, which is because that's my bias, and we're back up above the 200-day. And considering the entirety of this wave count, I don't think that we come back down below the 200-day moving average and that this move here is corrective, right? But let's not rule out the possibility. So what I would want to see here going forward next week is a move above the 88.6% fib, right over here at 59.56. So taking a fib from these highs down to the lows, we can see that we're just under the 88.6% fib. We've already gotten over the 786, right? I would say that that's sufficient enough. But if you want extra confirmation that this correction is done, I just want to see a move above 59.56. Once we get that, then we'd be heading towards this supply zone right over here. You see this supply zone over here? And that supply zone would be sitting at 6,016 and 61.16. Okay, get above the supply zone, then we're looking at our wave 5 target with the point of interest being 63.86 up to 66.22. Now, it's very easy to say that once we get up here, it's going to be a top and then we're going to go in for your bear market, right? It's very easy to say that. However, instead of taking a look at it in such a linear fashion, what if it just comes down a little bit and then we just form another diagonal, right? And then we top out later, like in 2026, right? So we will analyze the market once we get there. But for now, what I would want to see going forward is just simply a move above 59.56. Okay, so the S&P 500 looks great. Does not look bearish at all. And what we can also do is take a look at MNQ. So this is NQ. This is my wave count here on NQ. Let me just remove these drawings. It's a little bit messy. Okay, so this is NQ over here. Same concept, right, as the S&P. This over here was your macro 4. This is your macro 3. And now this was your wave 1 leading diagonal back in 2022 up to 2023. You have your ABC down for your wave 2, and this whole entire move was your wave 3 to the upside. Okay? So this is subwave 1 of 3, subwave 2 of 3, subwave 3 of 3. Then you have an ABC correction in the form of a flat, backtesting the 200-day moving average for your subwave 4 of 3, and then finally you have your subwave 5 of 3, which is a ending diagonal. So same as the S&P, the waves are overlapping in a rising wedge formation. And we actually perfectly top out at the 200% fib. So you see the 200% fib over here? When you take a fib from the 2021 high down to the 2023 low, so right over here. Okay, so if we take it up from here, we can see that we topped out there at the 200%. We're just a little bit below it, okay? But regardless, we still got up there. It's actually the 1.886. Okay, that's the 1.886. Then this move over here, this very fierce move down by over 25%, which is really crazy for the stock market. Like it doesn't move like this normally, right? But we had it, and we came down in a 3-wave move, right? A 3-wave move down in your A, 3-wave move up in your B, and then a 5-wave move to the downside within your C. Then we rally back above the 200-day, and we're actually above the 786. What I'm thinking for next week is we move up to this supply zone here at 21,835 and 22,317. I think we move up to that level, and then we want to see the trend direction that it takes once we get there, right? We could form an inverted head and shoulders pattern where this is your left shoulder, this is your right shoulder, and then we have continuation up for your wave 5 of 5. Or we just blast straight through it, right? Let's also, similar to that of the S&P, take a look at the 886. Where is the 88.6% fib on this chart? Okay, it's sitting there at supply zone, 21,874. Okay, so I want to see a move above that supply zone. I want to see how price reacts to it. But so far, it looks pretty good. I know a lot of people are calling for Black Monday because of Moody's downgrading the United States credit score, but I think it's FUD. So we'll see how it plays out next week, and I'll make sure to keep you guys updated in the Discord. I'll try to keep you guys updated on YouTube, but if I don't post an update, then I'll be in the Discord. So if you haven't joined the Discord, click the link in the description below. You guys get access to an amazing community, over 350 assets you can take a look at. You can ask me any question you want, along with connecting with me one-on-one. So these are the next targets for the Nasdaq, sitting at 24,000 to 26,000. Let's go ahead and take a look at the Russell 2000. I think that's very important, and it's looking great. Russell 2000 is rallying towards the 200-day moving average. And what I'm thinking here on the Russell is that what if this is your macro ABC correction? Now we go in for the next leg. And if that were the case, then we're in for a big surprise in the altcoin market, right? You have your 3-wave move down in your A, your 3-wave move up in your B, and then a 5-wave move to the downside within your C wave. And then we go in for the next leg where breadth opens up in the market, right? Simply, it would be at 2,700. Let me see here. So let's take a look at the golden ratio at the 1.618. Yeah, around 2,900, 3,000 bucks. 2,800. Let's take a look at the 1.382 extension. Okay, 2,781. Let's take a look at the 1.236. Sitting at 2,660, so just shy of 2,700. So this would be considered a flat pattern where the C wave fails to terminate beyond the bottom of your A wave. Okay, you can see that we perfectly came down and bounced off of the 786 at 1804. We went just a little bit below it, just shy of tapping the 886 support, but we did bounce off the 886. Okay, so I'm thinking this is a flat pattern, but it will only be confirmed once we get back above the 200-day moving average. Okay, you actually just swept this high over here at close, very slightly. So you may, since we've taken out that buy side liquidity, you may come down a bit for a little bit of a retrace, form a right shoulder within a inverted head and shoulders pattern, and then continue up from there. Okay. But what I want to see here going forward for the Russell is simply just a move back above the 200-day moving average, sitting at 2178. I hope you guys enjoyed the video today. If you guys have any questions, please feel free to let me know. Please like, share, subscribe, comment. Peace out, and take it easy. I'll see you in the next one.